You have to figure out what you're good at and what it gives you pleasure to be good at. And then just give it everything you've got and do your best to become the best you can be. And, as we said earlier, try to make the world a little bit of a better place with whatever skills or gifts you have, however small they might be. Just try to leave the world a little bit better off than it was before you came along.
Hello and welcome everyone. I am Vishal Khandelwal and this is the 1% Show. This show is an open ended exploration into the minds of the wisest people around to help us learn to think, invest, and live each day a little as 1% better. You can learn more at safalniveshak.com. In the Hindu epic Mahabharata, there's a character named Sanjay who acts as a messenger for King Dhritarashtra, who is blind and cannot see the battle between his sons and their cousins unfolding in the battlefield of Kurukshetra. Now, with a special gift of divine vision, Sanjay tells the king everything, every move on the battlefield, every conversation, and every lesson, especially the wisdom of the Bhagavad Gita that Sri Krishna delivers to Arjun. Sanjay is not just describing what's happening, but also interpreting, making sense of the chaos, and turning a war into a story full of meaning and insight. So, everything that the world knows about Gita is actually Sanjay's words as he listened and interpreted of what Krishna advises Arjun. Even in the last verse of the Bhagavad Gita, it says, Matihi Mama, which means that's my opinion. This clearly highlights that Sanjay was trying his best to honestly put forward what was being spoken, yet it had his own interpretation. And that makes who Sanjay is as a person extremely, extremely important. I mean, no, not to even understand the knowledge of the Gita, which is deep and complex, it required a man of not only high intelligence, but a person who is also spiritually evolved. It required a person who could not only understand what was being spoken, but also the context in which it was being spoken, and thus captured the essence of conversation by understanding the true meaning hidden behind the words. When I think of my special guest today, who is Jason Zweig, the first person I remember is Sanjay. Apart from all the wonderful work Jason has done over the years, he has, in his own way, brought Ben Graham's timeless wisdom to life, translating the dense ideas of the intelligent investor into something vivid and practical. Investing is a battlefield too. It's full of risks, there are emotions, and there's a lot of uncertainty. And Jason, like Sanjay, does not just explain the rules of the game as described by Graham, and also as per his wide experience of observing the behavior of markets and investors over the years, but he also tells us why these rules matter, how to avoid the traps that blind even the smartest people, and how to think clearly when everyone else is losing their heads. His writing is not just about investing strategies, but also about staying grounded, thinking independently, and staying true to your principles, no matter the chaos around you. Just as Sanjay helped the blind king grasp truths beyond the battle, Jason helps us see past the noise of the markets to focus on what really matters. And just like the Bhagavad Gita, while being very deep and complex, still has a universal appeal, thanks to the interpretation of Sanjay, Jason has done the same for us investors with Graham's ideas and his own wisdom of investing. Now, as far as formal introduction is concerned, Jason has almost 40 years experience in investment and financial journalism and is a personal finance columnist for the Wall Street Journal since 2008. He's also the editor of Ben Graham's The Intelligent Investor, as was revised in 2003, and also now for 2024 edition of the book that releases tomorrow. Jason is also the author of Your Money and Your Brain, one of the first books to explore the neuroscience of investing, and also The Devil's Financial Dictionary, a satirical glossary of Wall Street. He holds a BA from Columbia College. With this long introduction, Jason, and no further ado, it's an absolute honor to have you on the 1% show. And thank you so much for agreeing to do this.
My pleasure, Vishal. It's great to see you again.
Thanks, Jason. Same here. Jason, I want to start with this conversation with your father. Just 2 days after your father passed away in October 1981, you wrote a very special note for him. You called him the greatest, the strongest, and wisest man you've ever known. When you reflect on the bond you shared with him, what would you say is the single most important lesson you've carried from him into your life and career? And how has that lesson guided you, your personal and professional decisions over the years?
Well, so my father had lived a very full life. I mean, he died when he was in his mid 60s, when I was very young, just in college. But he had been a farmer, a teacher, a soldier, and a connoisseur of art and antiques. And I once asked him what he learned during the Second World War, when he was effectively the captain of a ship that sailed the world, and was involved in quite a few battles and skirmishes in at least 4 different oceans. And I know he sailed across the Indian Ocean, although I'm not sure he ever docked in India at the time. And he said, there's nothing too evil or too noble for human beings to do to each other. And he had, I think, a very realistic view of human nature, that people are capable of the most horrible behavior and the most wonderful behavior, and it can occur in the same person. And I think it's important for all of us to realize that to be human means that you're profoundly flawed, but you're also capable of incredible positive achievement as well. And Shakespeare also, and Abraham Lincoln, our greatest politician in America, I think we're very aware of this as well. You know, Lincoln talked about the better angels of our nature, which is a beautiful phrase. It's wonderfully poetic. But when you think about it, it's an interesting phrase, the better angels of our nature. It makes you realize there are bad angels too. There must be. And of course, John Milton wrote a lot about bad angels in Paradise Lost. So I guess I try to be less judgmental of people and more judgmental of ideas, particularly as I mature in my career, because I think we shouldn't be so judgmental of people, because everyone is kind of like us, partly good and partly not so good. But we should be very judgmental of ideas, because bad ideas need to be driven out of the intellectual marketplace, so that people can be. We don't want bad ideas to be the obstacle that prevents people from being good. I think that's how I would put it.
So, Jason, you once shared how you read the Danish philosopher Soren Kierkegaard's words that no individual can assist or save the age. He can only express that it is lost. And when you told your father about this, he responded that while Kierkegaard was right, this was exactly why you have to try to save the age, and you agreed with what he told you. So, how did that conversation shape your perspective on the role we play in life, and how have you applied this wisdom to your career?
Yeah. So I was in my final year of college, and my dad was terminally ill, dying of lung cancer. And I rode the train up from New York City to our house in northern New York State. And my dad asked me, "What are you reading?" And I said, "Kierkegaard." And he said, "What is he telling you?" And so I quoted that line, which I thought then and still think is so beautiful. No individual can assist or save the age. He can only express that it is lost. And to me, at that time, in my early 20s, what was beautiful about it was sort of the tragic view of life. And my dad sort of took the darkness in it and found the light that was hidden inside. And he said, well, Kierkegaard is right. You can't save the age, but that's exactly why you have to try. And he sort of took what Kierkegaard had said and I think made it even more beautiful. And his point was that knowing that you can't repair the entire world shouldn't make you give up on trying. It should make you try even harder. And you have an actual obligation to make the world better. And the darker things seem, the harder you have to try to bring light to the world. And so in my work, all I care about is trying to reach one person, not every person. I have hundreds of thousands of readers every week because I have the good fortune of working at the Wall Street Journal. And I'm not trying to convert every single one. I'm just trying to reach one person. If I can stop one person from chasing after the latest market bubble or listening to the wrong people or ignoring valuations or just believing in bad ideas, if I can just get one person to listen, that's all I'm trying to do. And I might never know whether it succeeded that particular week, but that's my objective, just to get one person to listen.
I think that's right. As we were discussing, I think I've been writing myself for the past 13 years. And initially, when I started, there was this scare or fear of going out and publishing something in the public domain, and I was fearing that I'm not really sure how it's going to impact people or what will people write back to me. Are they going to hate me for what I'm writing? But then gradually, over a period of time, as I realized that, like you said, if I could help just one person see the light, I think my task would be done, and that's what I've been doing ever since. So I think that's such a beautiful lesson that I think Kierkegaard, that you learned from him, and then I think your father also mentioned. So I never knew, I did not hear about Kierkegaard that time when I was starting on, right?
Yeah.
But I think the lesson has been well taken. It has really helped me in terms of how I've been writing over the years. So I think it's great to know that echoes in what you've done as well. Uh, you've written for almost 40 years, and I'm sure there have been a lot of times where you had to go against the grain, or go against the situations in front of you, maybe face some ethical dilemmas as well, right? So could you recollect a particular moment when you felt compelled to stand up for what was right, even though it came with a lot of challenges, and how did that one decision impact your career and the way you approach financial writing?
I'm sure you get this as well, Vishal. I get a lot of feedback from my readers, and it's often very critical. What I always tell people is it's not my job to tell you what you want to hear. And most people, and I'm no different, and I'm sure you're the same. Most people want confirmation. They want to be told that what they already believe is the truth, is correct, is good. And our beliefs are part of our identity. They're what make us ourselves. And so whenever as a writer, or even as a private individual, you take a public stand against something that's popular, you're going to offend a lot of people. And I guess I first learned this in 1999. I wrote when I was working at Money Magazine, I wrote a column that was called baloney.com. And I was intensely critical of the mania for internet stocks that was underway at that time. But I also knew that it was going to be unpopular. And although I don't remember the exact words, I started the column off saying something like, for the next few months, perhaps the next year or two, this column may seem like the stupidest thing you've ever read, because I wanted people to understand that I could see and feel that they felt they were right. Because, one of the most dangerous things when you invest is that prices feel like proof. If I buy a stock for 10 and then it goes to 20, I say, oh, that proves that I did the right thing. I bought it at 10 and now it's at 20. And that proves that I'm right. But of course, it could go to 5 tomorrow. It could go to 0 next month. So the price movement isn't proof of anything until you've actually sold. And millions of people had bought internet stocks and were sitting on enormous unrealized profits. And here I was telling them that they were all wrong and that it was just an illusion. And I got hundreds of, angry, often very nasty emails, a lot of which compared me to various parts of the human anatomy that I won't itemize because I'm sure family members are listening. But people were furious. But then years later, I got an envelope in the mail. This was many years later, probably 5, maybe 8 or 10 years after that was published. I got a letter in the mail and I opened it, and in it was that column that I had written with a note from a person who said, I read this at the time and it made so much sense to me. And all my friends were buying crazy internet stocks that all turned out to be worthless. But I carried your article around with me in my wallet for a year and a half. And anytime they tried to persuade me, I would just take the article out and look at it and read it, and it still made sense. And so I never put any of my money into those stocks, and I didn't lose any money on them. And I wanted you to have this to show that your article meant a lot to me. So, getting back to your previous question, that was the one person I had reached. And maybe I reached a lot of other people, but maybe I only reached him. But obviously, it meant a lot to him. And of course, one of the kindest things that a reader can do is to say to the writer, you helped me. And so I kept that letter from that reader. I still have it somewhere. And I never forgot it. And it's very important in life to have what Warren Buffett calls an inner scorecard, and not to judge your success by how most other people think of you, but just to judge it by your own inner best judgment of whether you're doing the right thing and standing up for reason and taking a stand. And so that was the first time. But that's kind of my motto what I said earlier. It's like, it isn't my job to tell people what they want to hear. They don't need me for that. They can get that anywhere, including in their own heads. It's my job to tell them what they need to know, or at least what I believe they need to know. And very often that is going to infuriate people. And that's part of the job.
So I'm sure you receive a lot of such emails, which infuriates, in the sense, people who've written back to you that they did not really like what you said because that was not their version of what they wanted to hear. And I'm sure you're also receiving such kind of messages from people now, because it was like 25 years back when you wrote baloney.com, and over the past 2.5 decades like that have passed, the pace of the flow of information has just accelerated dramatically, which is largely driven by social media, 24 by 7 news cycle, and the bull markets that we've seen ever since 2008 crisis hit. Now, from your vantage point, what significant shifts in the emotional makeup of behavioral tendencies of investors that you have noticed? Has it become worse? Has it improved over a period of time? And how do you think the modern environment, where information is constant but not always valuable, and most of that information is noise, it has changed the way people approach their financial decisions? So, what are the long-term implications of this kind of shift that you're watching from your vantage point?
Yeah, I've been thinking a lot about that question lately. You know, largely because the new edition of The Intelligent Investor is coming out. And, Benjamin Graham understood very clearly that the biggest challenge for any investor is to maintain your independence. And not to quote Kierkegaard again, but but he did write that the easiest thing in the world for a person to lose is his or her sense of self, because the world doesn't want us to be individuals. The world wants us to be sheep. And there's enormous pressure on everyone to think like a member of the crowd. And I think maintaining your independence, your ability to be skeptical about the prevailing belief, the predominant behavior, is probably harder than it's ever been before. I mean, look, when I was starting out, your stockbroker, you either had to go to your stockbroker's office or to pick up the phone to call your stockbroker. Your stockbroker had to be free to take your call. Maybe you had to leave a message. Maybe it had to go through the stockbroker's assistant. Maybe you couldn't even make the trade that day. And now, of course, your stockbroker is in your pocket with your phone. And your stockbroker is sending you trade alerts all day. And you can't escape the news. You walk down the street, you see it streaming across buildings. It's in your car when you drive. It's everywhere. And everyone wants you to trade as fast as possible, as much as possible. And the propaganda, first from the financial industry, but then also from your peers who are bragging on social media. They're on Instagram, they're on TikTok, they're on Twitter, telling you, I just made, this amount of money on this stock. What about you? Resisting all of that is enormously difficult. And of course, what we have to recognize is something very, very simple, which is, technology is a tool. It doesn't make things worse and it doesn't make things better. It all depends on how you use it. The example I always like to give is, with a knife, you can kill people or you can heal them if you're a surgeon. With a hammer, you can knock a house down or you can build a house. With nuclear power, you can provide energy, you can heal people with cancer, or you can blow them up and kill them. And internet technology, your cell phone, AI, all the devices that we use, all the ways we're wired in today's world, those can be good for us or they can be bad for us. And I think the key is, if you accept technology the way it's presented and marketed to you, it will be bad for you. You have to take technology and you have to reset it, and you have to rethink the way you apply it in order to make it work for you rather than against you. So instead of alerts telling you to trade, you should have alerts telling you to put your phone away. And you should set those. Instead of trading on a brokerage app, you should delete the app from your phone, and you should use only your desktop or your laptop computer. And you shouldn't trade when the market is open. You should trade when the market is closed, so that you can't get swept away by the short-term events in the market. So it's a huge challenge, and it's never been harder for people to distinguish information from noise, information from propaganda, to find the kernels of truth in, this enormous stream of information and sound and light that we're all bombarded with. So it's a real challenge. I think it's harder than it used to be.
I'm sure. I think we're seeing the repercussions all around, especially I can talk about India, where pre-COVID and post-COVID, there has been a mass surge in the number of people who've opened stock trading accounts. And most of the people are doing on their mobile phones. And most of the people who've joined new are on average just 20, 25 years of age.
Mm-hmm.
And they're all over the internet talking about how much money they made in the past 2 to 3 or 4 years, irrespective, ignoring the idea that it was largely luck that the markets worked really well. And then we are in that cycle
Yep.
where since the markets are working well and people believe that they're going to continue to work well, they keep going up. So as you said, the price becomes the proof.
Yes.
I think from the point that you mentioned, taking or using technology responsibly, using the tools that we have responsibly to trade stocks, to buy stocks, and indulge in stocks, that's one thing. But I think also going back to your interview that you did long back, and which is one of my favorites on your website, which is the one that you did with Peter Bernstein, where he emphasized on the idea of survival investing. And you yourself have written extensively about how today's financial markets seem more speculative than ever, with new investment vehicles and fads that have gained popularity at an unprecedented pace. So, given all these, and keeping that technology aside, what advice would you give to individual investors who want to survive getting swept up in this speculative environment? And how can they focus on long term value and avoid the pitfalls of chasing trends?
Yeah, so I think there are a few things, Vishal. I've written a lot about decision hygiene, cleaning up your environment. And I think that's the first step. So, the first most important thing to do is, I think a lot. I had a friend who died of alcoholism, very tragically. And one of the things that people learn in Alcoholics Anonymous is to clean up their environment. You can't rely on willpower alone. If you have alcohol in the house, you will drink it. If you walk down the street that has a bar you will walk into the bar and you will order a drink. So you have to remove the alcohol from your house. You have to stay off the street that has the establishment that sells alcohol. And investors have to approach their market environment using the same basic principle, which is that temptation is everywhere and I have to remove it from my environment. I shouldn't count on my willpower, because my willpower is partly an illusion. It works really well when the temptations are not intense. So, when everything is calm and quiet, it's easy for me to say, if the market crashes, I will hold all my stocks. And that's easy to say when the market is near all-time highs, as I think it is in India and as I know it is in the US. But when the market does crash, suddenly the temptation to panic will be very intense. And so you have to clean up your environment and keep it clean during the easy times, so that when the hard times come, both when the market is at a bottom and when it's at a top, the extremes of the market are what are dangerous, the bottom and the top. And so what I like to suggest to people is you should put most of your money in an index fund, a market tracking fund. Put most of your money in there so that if you are tempted to do anything rash, you can only do it with a small portion of your assets rather than all of it. Because what really hurts people is going all in with dangerous behavior. And if you can only do dangerous things with some of your money, you can't hurt yourself too badly. So that's the first principle. And then the second principle would be you set the remaining money aside, and you can invest that however you wish, but you can't add to it. And this is a principle that I got directly from Ben Graham. Many people call this a mad money account. It's where you can play, but you don't have to play. You can be very serious with that account and very methodical. But the key is that you can't add money to it. And why is that? It's because if you're doing well, then the account should fund itself. You will be making investments that go up in value, that generate cash, that give you more money that you can plow back into making more investments. If it's doing poorly, eventually it will run dry and you'll be tempted to replenish it so you can keep going. But if it runs dry, that is a direct signal that you should stop. And the other thing that you have to do is that all your investing should be methodical. You should use a checklist. You should use a watch list. You should have target prices. You should record your rationale for every decision you make so that you can go back once you know the outcome and evaluate whether your process was good and how you can improve it. And it's by being more mindful and deliberate with procedures like that, and then layering them on top of a good decision environment, that's what keeps investors out of trouble.
So I assume this is for, as Ben Graham defined, the enterprising investor that you're talking about
Yes,
into following the checklist, right?
exactly.
Again, going back to the same question, a part of it, right? Do you believe that for a defensive investor, or for someone who is not a professional investor, picking stocks really makes sense in today's world, or it's purely index fund that you're talking about?
Well, So let's review for a second Ben Graham's great definitions. So uh, first of all, he said most people are probably defensive, and by defensive, he didn't mean what the financial industry means. The way the typical stockbroker or investment banker would use the term defensive is that you have a low tolerance for risk. You don't want to lose any or lose much money. And that's not what Graham meant. What he meant by defensive was that you were defensive of your time and your energy. You know, maybe you're busy raising your children. Maybe you're just very busy building your career. But if you don't have the time and you aren't prepared to commit the effort and energy, then you're defensive. You want to protect yourself against learning later that you've made a bigger commitment to investing than you're comfortable sustaining. That's what a defensive investor is. And a person like that, and it describes most investors, I think, wants a low maintenance approach to investing. And an index fund is the ultimate low maintenance device. You can quite literally buy a market tracking fund if it is very low cost and it's well run, and you could hold it for the rest of your lifetime and effectively never make another decision. And not only is that a great defensive tool, but it's also something that Graham himself recommended. Graham was an early advocate for index funds, and of course, Warren Buffett is on record saying that that's what most people should do. But I think you can be a defensive investor and still enjoy the idea of putting a small portion of your money to work in active decisions. The key is you don't want it to end up eating your life. If you're spending Saturday evening going through spreadsheets, you probably thought you were a defensive investor. You've either become an enterprising investor or you're fooling yourself into thinking you are. And I think a lot of defensive investors want to believe they're enterprising, especially during bull markets. So it's very easy when when stock prices are doubling every couple of years to think, oh, I'm good at this. I'm going to put more time and energy in this because the harder I work at it, the more money I'll make at it. Which, of course, is true if you're Warren Buffett or Ben Graham. But if you're not, you're just kidding yourself, and you happen to be in the right place at the right time, but it isn't always going to be this easy. And when it turns hard, then you will suddenly realize, I don't enjoy this at all. And that's the ultimate thing that as a defensive investor, you need to defend against, which is kidding yourself and fooling yourself into thinking that you have more of an aptitude for this than you actually do, because the market has been generating your results for you rather than you earning them through your hard work.
That's such a invaluable advice, Jason. I think that's the ultimate survival toolkit that you just outlined for people to survive the stock markets and investing for the next few decades and actually create wealth by not acting a lot of time, by not confusing themselves as enterprising investors when they are defensive. Right? And I think that's one of the biggest lessons that I also take from you and also from Ben Graham. Talking about Ben Graham now and the revised edition of his book, The Intelligent Investor, that's releasing, I should say today because it's on 22nd of
Yes.
October. And I plan to publish this episode on 22nd of October. So the days unite. So first, what are the maybe couple of major parts of revision that you have undertaken in this edition? That's my first question. And so maybe if you can answer that, and I'll ask you the second question around that.
Sure. So when I set out to write the new commentary, and I guess let's step back for a second, Vishal, for people who might not be familiar with the book. So Benjamin Graham's book, The Intelligent Investor, was first published in 1949 and last revised by him in the early 1970s. And, this is the book that Warren Buffett has said many times is the best book on investing ever written. It consists of 20 chapters, and it covers most of the basic mechanics that an investor needs to know. And of course, it originally was written for an American audience, but I do think the principles are universal. You would certainly need to change the names in other cultures, but the basic ideas are valid no matter where you live or what your markets look like. So my role in the book is to annotate Graham's text and to write commentaries that accompany each chapter that put them in context for today's readers. And Graham's original text remains completely intact. Nothing has been removed or changed. But quite a few of his references need explanation for today's readers. And of course, the markets have changed quite a bit since the early 1970s. So my role was to update the commentary primarily. And so when I started out, what I realized is I shouldn't look at what I wrote in the last edition, which came out in 2003, because it was over 20 years ago. And so I wrote all the commentaries without ever looking at what I had written last time. I just started from scratch, from a clean slate. And there have been enormous changes in the past 20 years, obviously. Everything from the rise of online trading and smartphones to Bitcoin and 24/7 trading around the world. But the challenge of the investor still hasn't changed. And Graham had a beautiful passage in the first edition of The Intelligent Investor where he described what he meant by the word intelligent. And he was very clear. He said it's not IQ or some other quantitative measure of intelligence. It's not whether you have an MBA or a PhD or whether you're chartered in accountancy or you have training as a financial analyst. He said it is more a matter of character than brain. And what he meant by being intelligent was that you have to be skeptical and independent. You need to be humble. You need to be brave. And all of those things, which are personality attributes, are important. And as we were talking about earlier, they're all sort of under assault from the technology we carry around with us and that pervades our environment all day long. And so much of my commentary is focused on helping people navigate today's markets without being swept away by them. And how do you maintain your independence? How do you think for yourself in a world that wants to do your thinking for you? That's the real challenge.
That's great. And you mentioned about the last major revision that you did and was published in 2003. I have a I have a copy, and this is the first ever book I ever bought from my salary, my income. This was Intelligent Investor. And I also mentioned that it became super special when you autographed that in
Oh,
2018 when we
yes,
met at your office,
that's
right?
right.
So it's one book that I hold in extremely high regard, probably the best book that I've ever read, and the first book that I ever read on investing, and it really changed the trajectory of my life and career, and especially your commentary, Jason. So thank you so much for all that you've done. And I'm
Well,
looking
that's
forward
great.
to the book as
That makes me
publishers
very that
tomorrow.
makes me very happy, Vishal. Thank you.
I never. So I think at the start of the book, if I'm maybe using the not the right exact words, but you mentioned that you envy the person who's reading Intelligent Investor and Graham for the first time,
Mhm.
right? So I think I would say the same thing when I'm talking to you, that I envy the person who's listening to this conversation for the first time.
Ah,
So we are talking here, and we are talking about Graham, and we are talking about your wisdom, right? So Graham, as you mentioned, right, there are certain aspects which he wrote about which may not be relevant, except the principles, the most important principles that he wrote about, right? They are still as relevant as they were. 2003, when you published this, the last revised edition, that was probably people. That was a time when people were a bit pessimistic. We just came out of the dot-com bubble burst, and the
that's
economy
right.
worldwide was on a downturn. This revision has happening probably people when people are the most optimistic, right? So
That's
coming back to the same question, which I think you would have received so many times in your lifetime as the editor of the Intelligent Investor, what makes Graham relevant today?
Well, what makes Graham relevant is that he had this profound, beautiful understanding of human nature. Uh, and, uh, the advice he gives in chapters 1 and 8 and 20, which are really the heart of the book, um, will never go out of style. I often get annoyed, Vishal, when people, and it's usually professional investors who do this, when people criticize Graham for having these outdated formulas. One of the things Graham is famous for is he wrote, uh, you shouldn't pay more than 15 times earnings or 1.5 times book value. And then if you take the product of those two, it's 22.5. And you never should pay more than that for a stock. And of course, if you tried to do that today, there would be almost no stocks at all you could even buy. And so people say, oh, it's obsolete. But in fact, if Graham were alive today, he would be using a different formula, if he would be using a formula at all, because he changed those numbers in every edition of the book as the market changed around him. He wasn't rigid and hidebound the way people often portray it. He was very flexible. But what he never changed was his focus on the role of each individual investor within the atmosphere or the environment of a financial market. And your role is not to let the market tell you what to do. Your role is to do what is right in your facts and circumstances and not to be dictated by Mr. Market. And um, so Graham is relevant today because investors need to hear that message more than ever before, because we're so bombarded with messages trying to erase our individuality as investors, that recognizing, as Graham did, that the one key advantage that you have as an individual investor is that you don't have to listen to what the market is doing. The professional investors have no choice. They have to buy whatever's popular. and they have to sell whatever goes out of fashion. Because if they don't, they'll fall behind. But as an individual investor, it's okay if you fall behind temporarily. Um, in fact, it's okay if you are a bit behind, as long as you're ahead of the progress you need to reach your own financial goals. So, maintaining that independence is the single most important thing any investor can do. And that's precisely why listening to Ben Graham is so important today.
That's right. I think also in my interactions with investors, when people question whether Graham is relevant in today's world, I think exactly as you said, right? He would have changed his approach to invest, not just in not investing, but the way the numbers panned out and the way the markets evolved. He would have changed himself as well. It was not really a fixed mindset. But I think the beauty of the intelligent investor and Graham's teachings is that they help you build the character of being a good investor. And characters are all the markets, they don't change with market times and market situations, right? So that's,
Exactly.
I think, the most profound lesson I take, and I try to tell people who are skeptical about the intelligent investor and whether it's still relevant decades after Graham wrote it. So I think great that you share that it's all about the character, it's about the principles that don't change at all, whether you are in working in a different geography or whether you are working in a different market environment. The fact that you don't need to listen to Mr. Market while making a decision, the fact that you have to have that margin of safety in all kind of market scenarios, I think these are such important principles that never would go out of fashion, right? And
Right.
that's a
And maybe there's one other point to make, Vishal, here, which is that the very people who criticize Graham for using outmoded formulas tend to be bringing formulas of their own, right? They have some they have some screen or some filter. They're building a spreadsheet. They have a watch list on their brokerage account, and it's constructed using a set of parameters that they have designed bespoke for this purpose and this market. And as soon as the market changes, which it will, their formulas will stop working. And that's what they don't tell you. They say, oh, Ben Graham, his formulas are outmoded. Mine work in this market. And that may be true in this market moment, but they might not work next week, next month, next year, and they surely won't work over the next decade. What always works and never fails is understanding the importance of character and knowing who you are as an investor. If you don't know who you are as an investor, it does not matter what formulas you use, you are going to lose a lot of money before this is through. And it will take you by surprise, and you will learn the wrong lesson. You will learn, oh, my formulas were wrong. Instead of learning, maybe I shouldn't be using formulas. Maybe I should be learning about myself before I pretend to try to learn about the markets. And that's what's missing. And that's what Graham teaches.
like a philosopher. I think all philosophies teach us to know thyself, right? So if you can just know yourself, like Graham also taught, right, you'll do well for yourself, even if you are underperforming the next money manager or the next investor. I think that is not important. All you need to do is to know
Exactly.
yourself and then invest accordingly.
Yeah.
And I think there are so many misunderstood ideas of Graham that people don't really think about. For me, I think personally, apart from the investing ideas that I've learned from him about the principles and the character that he's helped me build as far as investing is concerned, I think the biggest idea for me is not about investing that I learned from Graham. It's about the idea when he said that a good day is when you can do one thing creative, one thing foolish, and one thing generous. And he's been, I think, of great generosity for investing community, for people at large who wanted to understand themselves as investors in their wealth creating journey. So I think that takes the cake for me. I think everything else kept aside.
Yes, it's a wonderful thought, Vishal, and it reminds me of one thing. I've had the very good fortune of being able to interview Warren Buffett because of my job at the Wall Street Journal. And the first time I ever met him, one of the questions I asked him was, "What was the most important thing you learned from Ben Graham that was not about investing?" And he said, "Ben taught me that uh, you should always have lots of friends who are at least 20 years younger than you." And I smiled. And then Buffett said, and he also said to me, "And the older you get, the easier it becomes." And um, if you look at Warren Buffett and his social circle, you can see that many of his friends are much younger than he is. And the same was true for Charlie Munger. And they both learned that principle from Graham. And it's a wonderful bit of wisdom in life. And in my family, we try to do the same thing. We try to befriend younger people, but also people who are at least 20 years older than we are. We have a lot of friends who are much older than my wife and I are, and we enjoy them enormously. So that's a wonderful bit of advice from Graham that, like a lot of good investing advice, doesn't seem to be about investing at all, but ultimately it is, because you never know where your next great idea might come from. And it might come from that young person or that older person. And by opening your mind to a different social circle, you can come across ideas you wouldn't encounter otherwise.
That's so beautiful. I think that also reminds me. I think again it was Kierkegaard who said that life has to be analyzed backwards but lived forwards, right? So when you have people 20 years elder to you and 20 years younger to you, I think you're doing both things. You are analyzing backwards and also living forward by looking at the younger people out there. So I think that's such an invaluable statement.
Yeah, that's a very good thought, because, of course, uh, the people older than you uh, can understand life by looking backward. And when they do, they're looking at you, because you're at the age they were when they're retrospecting. And and you can do the same for people who are younger than you. So you can, you know, every culture around the world understands that wisdom moves from one generation to the other, and it's not all in one direction. We should revere people who are older than we are because they are wiser, but we also shouldn't ignore people who are younger than we are because they know things we don't. And I think investors make a mistake if all their peers come from the same age group.
So I was interviewing Morgan Housel, I think, a couple of years back, and this is one idea which he mentioned. I think that was so thought provoking. I think he mentioned about the skill which is the most underrated but so important, which is the willingness to agree with other people's opinions, right? And who better to have company with in terms of other people's opinions than 20-year elder people than you or 20 younger, because you are taking a span of 40 years of differential views, right? And that's such I'm not only from a point of view of a selfish motive of just learning, but like you mentioned, right? I think you become a better person when you are befriending people across ages, right?
Yeah, and to follow on Morgan's point, I think one of the real tragedies of society today, and this is true certainly in every culture I know about, is that we're really losing the ability to have civil disagreement. Um, another thing that I learned from my dad is that if you disagree with me, you are not my enemy. In fact, there's a strong case to be made that you're more of a friend for disagreeing with me than you would be if you agreed with me. How can I improve if all the people around me say that I'm perfect? I can only improve if the people I love and trust are comfortable disagreeing with me and telling me, no, that's not right. You shouldn't do that. Or why do you think that? That makes no sense. And if we look at especially political life today, you know, uh, in the U.S., people won't socialize with members of the other political party. Um, One side says the other is evil. The other says, no, you are. And it's terrible. We're talking over each other. We're not listening. When we pretend to listen, we don't hear. And it's so important. I mean, being open minded is one of the single most important things to becoming a better investor. But it's also incredibly important to being a good person. If your mind is closed, how will you improve? How will you get better, get wiser? How will you be better if you think you already have all the answers? And that's just very disturbing. And again, our technology makes it worse, because anytime somebody is right, um, what's the first thing they do? They go on social media and brag about it. And then it becomes harder and harder for other people to take a stand against that. And that sort of preserving your individuality while being open to the fact that maybe you're still not yet all the person you need to be is maybe that's the hardest thing for a person to do. And we all need help with that. And instead, we're all attacking each other anytime anybody tries to do it. And that's very sad.
That's right. I think this power of not knowing and living with the uncertainties of life, I think, is a skill which probably we all need to learn. And I think thanks for sharing your thoughts on that, Jason. Uh,
Yeah.
at the end of the Intelligent Investor, so thanks for sending me that reviewer's copy. So I got to read it, and I saw the conclusion at the end of the book you wrote, something that was not a part of 2003. So I agree with the fact that you've not looked at 2003 and you've completely rewritten the entire commentary, which makes it even more valuable for me. So you wrote in the end that the advice in this book is not only about what kind of investor you want to become, it's also about what kind of person you want to become. So how do you believe investing teaches broader life lessons about character, self-discipline, and understanding one's own limitations? And what's the deeper connection you think there exists between how we manage our money and how we manage our lives?
Well, I think investing is a wonderful laboratory for self improvement. Um, it it's a test. Every day is a test. Mr. Market comes knocking on your door every single day, trying to get you to do the wrong thing, uh, and trying to take away your individuality and to make you one of the crowd, to erase who you are as a person and just make you one of a herd of sheep. And um, investing well is about self discipline. And if you can apply that in your investing life, it's a training ground for applying it elsewhere. So many of the things that we do in our daily lives require the exercise of self-control. Exercise, dieting, raising our children, being a good employee, being a good spouse, being a good child to our parents. And if you can be a disciplined investor and set up rules and policies and procedures that make sense for you and improve your results, you can apply those same principles to the other aspects of your life. And certainly, I will say that in my own life, applying the beliefs that I've acquired as an investor and as someone who writes about investing, that's been very beneficial to me in how I approach other aspects of my life. And one of my favorite mottos, a saying that I use in all different kinds of contexts, is I don't have to have an opinion about everything. If I haven't looked at the empirical evidence and I haven't evaluated the quality either of other people's analysis or haven't done the analysis myself, then I don't have an opinion. I just say, I don't know. And so when my friends are arguing about the presidential election in the United States that's about to happen, and saying, oh, Trump is going to win or Harris is going to win, and then they ask me, who's going to win? I just say, I don't know. And I think anyone who purports to know or pretends to be certain is wrong. I mean, it's not really predictable. And you have to let go of that. You can't. Humans hate uncertainty. It's we live in a universe that has predictable physical laws in which unpredictable things happen all the time. And that drives people crazy. They want everything to be predictable. They want to understand and to know what will happen before it happens. And you can't go through life that way. You can't. It doesn't work that way. And I learned that from investing and from writing about investing. And you simply have to accept that uncertainty is an irreducible part of investing and life. And, my dear friend, Jonathan Clements, who was my predecessor at the Wall Street Journal, in May was having a few balance issues. He was a little dizzy. And, he went to the doctor, and a day later he found out he's dying of cancer. And it just came out of nowhere. He's one of the healthiest people I've ever known. He exercises regularly, eats well, doesn't drink. He's done everything right. And, the rest of his life has been snatched away from him without warning. And things like that can happen to any of us. And all we have under our control is how we respond to those uncertain events when they happen so unpredictably. And Jonathan has handled it as well as anybody I think ever has. He's accepting, he's trying to make the most of every day that's left to him, and he's determined to live the rest of his life to the fullest. And we just have to accept that we don't know what tomorrow holds. And we don't even know what today holds. And that's okay. It's okay. We'll find out. And when we find out, we have to make the best of it. So that's why I think the biggest lesson from Graham's book is that you can apply his principles not just to become a better investor, but to become a better person, to become wiser and more accepting and more philosophical about what happens around you. And I think people who try to know the answers to questions that can't be answered go through life angry and frustrated and bitter and fall prey to conspiracy theories and false certainty where no certainty exists or ever can. And so part of becoming a better person is accepting those limits and living within them. And it's fine. It works.
I think good you talked about Jonathan Clemens. So I think watching a video recently where he was outlining, he mentioned about the terminal cancer diagnosis and how he's trying to sort his financials in order. And someone asked him, how could your financials not be in order? But he said that he wants to do as simple as possible for his family who he leaves behind. And it also, I think, straight away reminds me of what Charlie said, right? That life is going to deal you terrible, severe blows, and that is not important. What is important is how do you deal with them instead of indulging in self pity about yourself. Uh, you've I think interacted a lot with Charlie as well, and
Mhm.
he passed away last year. And I think in an ode to Charlie, as a note, a special note in memory of Charlie, that you wrote immediately after his passing away, you mentioned how he was a moral exemplar, someone who showed how to think clearly, how to
Mhm.
deal fairly, and how to live fully. And we all know Charlie's wisdom; it is legendary. But I'm curious to know what unique insights or lessons you have learned from your conversations with Charlie that might be less known but deeply impactful for those trying to understand his philosophy on life and investing.
Yeah, so I did have the incredible good fortune of interviewing him quite a few times, both in person and over the phone, and I spent quite a bit of time at his house and at the Daily Journal, the company that he was chairman of. And I think it's easy to misinterpret Charlie Munger. I know he's hugely popular in India, and in the US, though, a lot of people saw him as kind of this arrogant old man, who had absolute certainty about some of his ideas and seemed almost closed-minded. And I think what people misunderstood about Charlie was that he wasn't conventionally humble. Um, I think he himself once said uh, something like, I don't know how many virtues I have, but humility is not one of them, or something like that. Uh, and in one sense, it's true. I mean, Charlie Munger was brilliant. I mean, he surely had uh, the IQ, the intelligence of a genius. Um, I'm sure if we gave him an intelligence test, it would be off the charts. But and he knew how smart he was. He knew very well that he was smarter than almost anyone he was speaking with. But he had a different kind of humility. He had what a philosopher would call epistemic humility. He was humble about what any human being can know. He didn't try to have opinions about things he wasn't informed about. If if he felt that he had done the work and he had researched a topic, he was like iron. You couldn't He wouldn't even listen to you. He was so sure that he was right because in most cases he was. Because he was so smart. And he had mastered a topic, and nothing was beyond him from food to physics. He had very strong opinions. But he also had a too hard pile, the famous place that he and Buffett would put ideas that they felt they didn't have the skills to understand. And you could ask him a question thinking that you were about to get one of his long, complicated, very well informed, reasoned answers. And he would just say, I don't know. And in a way that most people are afraid to say, I don't know, because they worry that it will make the listener think, I'm stupid, I'm not well informed, how can I admit that I'm ignorant about something? And Charlie Munger and Buffett, for them, that is normal. It's like if you asked Munger a question he didn't know anything about, he would just say, I don't know. You're asking the wrong person. Why are you asking me? And when he was with a person who was a true expert in a topic, he would just listen. He wouldn't talk at all. And then he would find out what the best book was on that topic and read that and maybe another 5 books and take very careful mental notes. And so, I mean, that's what I take away from him, is that most people, when they try to be humble, are just trying to convince other people that they're not bragging. You know, humility for most people is something like this. I cook a meal for you, and you tell me it's delicious. And then I say to you, oh, Vishal, it was nothing. I just threw a few ingredients together. I'm not really a good cook. When, of course, what I'm trying to do is I'm trying to get another compliment from you, right? And to Charlie, that was just false modesty and fake humility. To him, humility was just admitting you don't know something when you don't know it. And other than that, bragging is fine. Charlie was perfectly comfortable saying things like, yes, I bought that stock and it worked out great. He didn't see anything wrong with that. He didn't go through the charade of saying to people, oh, yeah, it worked out okay, but, whatever. He knew he had made a good decision and he was proud of it. And there's nothing wrong with that. But he was very careful not to pretend to know more or be more than he was. And that's the difference. And I think that's the single most important thing I learned from him, is that you have to stop it with the fake humility of fishing for more compliments, which is what most of us do all the time. And just say thank you and move on. And instead, approach every day recognizing how little you know about most of what surrounds you and just trying to learn a little more. That's, I think, what I took away from him.
Those are some wonderful lessons, Jason. Thank you. And I have a question on Charlie near the end, probably the last question that I'm going to ask you soon. But before that, uh, there's a question on another gentleman who you've closely associated with, and he passed away this year. I'm sure you would have guessed, Daniel Kahneman. You worked with him on the book that became Thinking Fast and Slow, and you wrote about his lesson on sunk costs. So tell us a bit more about that, and how have you applied that lesson that is so difficult for most of us to get our heads around, the idea of sunk cost in life and work. Plus, what can we learn from the lesson that you've learned from Danny on that idea?
Mm-hmm. Yeah. So while we were working on the book that became Thinking Fast and Slow, we had worked very hard on one chapter. And when we were done, I didn't say it out loud to him because he didn't like that sort of thing, but I remember thinking, this is really a thing of beauty. This is just incredible, which is a thought I try never to allow myself to have about anything I write by myself, but we had worked on it together, so it seemed permissible. And I woke up the next morning and there was a string of emails from Danny saying how terrible it was. And he ended up rewriting the entire chapter as if it had never existed before. It was completely different. And that's the hardest thing for a professional writer to do, to let go of what you've already written. And at that point, I don't think I was even remotely capable of doing it. And I was flabbergasted. And I said to him, how did you do that? And he said, I have no sunk costs. And he just completely let go of everything we had worked on. And it was such a shocking revelation for me that as a writer, you didn't have to be stuck with what you had already done, what you had already worked on. You didn't have to anchor on what you had already produced. You could look at it as if someone else had written it and decide, this isn't very good. I can do better. And the way you do that is you tear it up and start all over again. And of course, that's what I did this time with The Intelligent Investor. I could have gone back and read everything that I had written for the 2003 edition and said, how can I improve this? But instead, I never even looked at what I had written 20 years ago. I looked at Graham's chapters, but I never looked at a word of what I had written, my commentaries. And I started from a completely blank slate. And I try to do that in what I write for the Wall Street Journal. If one of my editors said, I don't think this works, then I go back and I just start over. And I will say, it is much easier to do in writing than it is in life. I'm not very good at letting go of sunk costs when I'm not at work. But it is a very powerful tool for improving the quality of your work. And I have all kinds of little tricks I use. What I will do is I will make a printout. I like to do this on paper rather than on my computer screen. And I will print everything I wrote. I might print it in purple on a yellow background in giant letters. And it forces me to see what I wrote very differently. And it suddenly looks strange. And it makes it alien. And it puts distance between me and what I wrote. Because, of course, your work is part of you. It feels like you, it tastes like you, it smells like you. All of those things make it hard to be self-critical. And so you have to change it somehow to get that distance. At least I do. Danny could just look at it.
My next question, Jason, to you is about your advice to the 20-year-old younger self that we were talking about some time back, or maybe a 30 or 40-year-old younger self, on how to deal with the uncertainties of life, with the changes in life, with the fast-moving world around, right? So, what are those one or two most important lessons that one can learn, or ideas that one can learn to survive and thrive in the next few decades?
So I don't know if this quotation is authentic. I know I read it when I was very young, when I was maybe in before I was in college. But the U.S. President Calvin Coolidge who was famous for not being very involved in policy when he was president. He was very hands off. But he supposedly said that if 10 troubles are coming down the road towards you, 9 of them will roll into the ditch before they get to you. And I think that's good wisdom for life. Especially when we're young, we worry about everything. I have children in their 20s, and they worry a lot about a lot. And it's hard when you're young to realize that most of the things you're afraid of either won't happen or aren't really fearsome when they do. And I think it's difficult when you're young to realize that even the bad things that do happen make you better. And that adversity is what tests you and builds your character. So, when you look down the road and you see those 10 terrible things rolling down toward you, it's better to face them than to fear them. It's better to stand up to them than run from them. And I wasn't all that good at it when I was young. And part of it is because, my dad had just died, and he was the person I leaned on very hard when I confronted challenges. And so I was more alone in the world than I wanted to be because of that. But I think that's an important lesson I would try to teach younger people, which is that most of the things you worry about, you probably shouldn't be worrying about. And it's going to be all right. And one of the reasons that's so difficult is when you don't have life experience behind you. As Kierkegaard said, life can only be understood backwards, but it has to be lived forwards. You don't have much behind you to get that backwards understanding from. And so maybe the way to learn that most of the troubles will end up in the ditch is study a bit more history. Talk to the people who are older than you. Try to learn more in practical terms about how the world works. And that can help you maybe face forward a little bit better. Spend a little more time looking backward.
So I think that is where I think the advice from Dale Carnegie, who said that it's such a good idea to live in day-tight compartments, right? And you're done with the day. You just think about the day, and when the day is done, you're through. So I think such invaluable advice of not worrying about most things in life because they're not going to come true.
Yeah.
And that is a advice that I'll take personally as well, because I am a worrier, right? So I keep reminding myself Carnegie's book is like an annual read for me, but I'll remember your advice about 9 of the 10 worries going down in the ditch before they hit me. So thank you so much
So
for
we
sharing
hope.
that. Wonderful. Yes. So, Jason, we're coming near the end of the conversation. I have a few more questions uh, that I have for the end of the conversation. So, first question is what is the best piece of advice you ever received, either in life or in finance? And what is the worst advice you ever received, and what did you learn from it?
Best advice. I think the best advice I ever got was I've never actually tried to answer that question, so I have to think about it for a second. I think I'm going to name a bit of advice that I got from Charlie Ellis, the great investment management consultant, and a friend of Ben Graham's, actually. Charlie said to me once, I don't invest for decades. He said, I invest for centuries. And I said, what do you mean by that? And he said, well, I have children, and my children will have children. And I have charitable organizations I care about. So I want my money to not just to prosper in the decades to come, but my horizon is well over 100 years out. And that immediately clicked for me. And that's how I approach investing. I really think that I'm investing for at least 100 years from now. Um, and the longer you can make that horizon, I think the better your results will be. And of course, Warren Buffett's famous for saying his favorite holding period is forever. And Ben Graham talked about the perspective of eternity. So I don't think I can invest forever, but I do try to invest for at least a century. So I think that's wonderful advice. And I think the worst advice I can ever recall would have to be advice I gave myself. And I think any investor who's honest, you can probably think of something you've told yourself that is much worse than anything anyone else ever told you. So many decades ago, when I was working at Forbes magazine, I was, of course, contributing to our 401k, which is our retirement, employer-sponsored retirement plan in the U.S. And if you contributed the maximum amount, which I don't remember, but I want to say was 6%, then Forbes would match all that money. No matter however much money you put in, Forbes would contribute the same. So it was free money, and I wouldn't contribute the maximum. And it was because I told myself that I could invest the money much better than the 401k could, and that I could do it so much better that I could do better with after-tax money than the retirement plan could do with pre-tax money, and the free money that my boss was going to put in for me. And of course, it was absurd. No one could do that. But I had persuaded myself that I was a brilliant investor. And so I worked at Forbes for 9 years. And so for 9 years, I was not contributing the maximum amount, and the company was not putting its maximum amount on top of what I would have contributed. So I incurred a massive opportunity cost, tens of thousands of dollars that should have gone in, that would have grown to hundreds of thousands of dollars today. And in fact, at this point, it's entirely possible that it's cost me over $1 million, and in foregone returns that I would have earned and would still be accruing tax-free if I had simply not been so stupid as to listen to my own advice. So I learned a very powerful lesson from that, which is I should follow the advice I give other people.
I think that's where we stumble. We don't really offer the same advice to ourselves.
Yes.
Jason, you read extensively and across various subjects, and you've, I think, generously outlined your favorite books through your blog and through your website. But if I were to still take an opportunity to ask you about the name of maybe one or two books that you hold in the highest regard, or that have influenced your way of thinking the most, which one or two books would you name?
Well, so I would give a different answer for investing than for life, I guess. So there, there are several wonderful books for investing that aren't strictly speaking investment books. I love the books by and about Richard Feynman, the great physicist, American physicist who won the Nobel Prize, uh, because he really teaches, in those books, he really teaches you how to think critically. And those books are wonderful. One of them is called What Do You Care What Other People Think, which is maybe my favorite. Another wonderful book, again, not strictly about investing, is called How to Lie with Statistics, by a man named Darrell Huff, which is also a terrific book. And so those are two I would mention, in addition to the ones I've always named in those lists of books, which you can probably link to in the show notes. I guess in life, the book that has always meant the most to me, ever since I've read it in college, is a book by the 16th century French writer and philosopher Michel de Montaigne, which is his book. It's just called Essays, and it's probably the book I've read more than any other book in my entire life. It's on my bedside table, and it's probably been there for most of the past 4 decades, wherever I've lived, in the US or elsewhere. When I lived outside the US, I brought it with me. And it's wonderful because it's a book about, I guess, what it means to try to be a thoughtful person in a crazy world. And he thinks constantly about thinking, and that's what he writes about. And he writes about his own mistakes, how foolish he is, the mistakes other people make, and all the themes that we've been talking about here come up constantly in Montaigne. And I just love his writing. It's not for everybody. There are a lot of people I've recommended it to who don't like it, but it's enormously meaningful to me. And he was a great influence on Shakespeare and many other writers who came after him, Emerson, and I think even in India, I think Tagore knew Montaigne's work and admired him. So to me, that's the book that means the most to me.
I think glad you mentioned about him, though I have not really read much of Montaigne, but I think through Tagore, right, as you rightly mentioned, I came across essays and I've read in bits and pieces. And I think one of the passages which I remember is when he writes about his friend, I think La Botte, if I am spelling that right. And he talks about the special relationship that he had and the statement that he made when someone asked him, why is he such a special friend for you? And he simply says, I don't know, but all I can say is that it seems that he is me and I am him. And that always reminds me of the special friendship between, say, Buffett and Munger that we've already
Yes,
seen, right?
yes,
Two people
yeah.
complementing each other so well over 60 years. So I think, thank you for mentioning that book again. And probably it's time for me to go back and read it in much more great detail as well. Thank you so much. So I have a couple of final questions. Uh, so my first question is, everyone walks their own journey in life, and we all must play our parts well. In your view, what does it mean to live a life well lived?
Well, I think you just have to you have to figure out what you're good at and what it gives you pleasure to be good at. And then just give it everything you've got and do your best to become the best you can be. And, as we said earlier, try to make the world a little bit of a better place with whatever skills or gifts you have, however small they might be. Just try to leave the world a little bit better off than it was before you came along.
That's right. That's a beautiful thought. Thanks, Jason. Now, coming back to the question which I mentioned related to Charlie that I wanted to ask you. So, a month before he passed away, you had asked Charlie what he might want for an epitaph of no, not more than 10 words. And he replied with complete humility. And he said, I tried to be useful. Now, having spent decades guiding investors, being helpful through the murky waters of finance, you've undoubtedly shaped countless lives. So, as you reflect on your own body of work, what legacy do you hope to leave behind? And like you asked Charlie, how do you want to be remembered in 10 words?
Oh my goodness. I'm glad you didn't give me the questions in advance, Vishal. Um, well, so as you may know, I'm a very avid student of art, particularly painting, and one of my favorite painters is the Flemish painter Jan van Eyck, who lived in the 15th century and painted in Belgium and France. And there's a portrait that's believed to be his self-portrait, and he inscribed on that painting his motto, his official slogan, presumably for his life. And I don't really know how to pronounce it because I obviously don't speak Flemish, but the saying is "Als ich kann." I think I'm saying it more or less correctly, and what that means is literally it means "as I can," but it's interpreted to mean I did the best I could, and I think I hope I won't have to be remembered anytime soon, but if I wanted to be remembered, I think that's what I would want on my tombstone. He did the best he could. When I write something, and I have a good feeling about it, what I tell myself is, I don't know if it's any good. I only know that I can't make it any better. And that's when I know I'm finished, because I've tried, I've put all my effort in, I've rewritten it, I've edited it many times. I keep polishing it, and then I reach a point where anything else I do seems to make it worse, and then I stop. And so I guess that's how I would like to be remembered. I did the best I could, and I hope it was good enough.
That's right. I think that takes us full circle to the initial introduction which I did of you, Jason, when I talked about Sanjay from Mahabharat and the closing statement that he made after reciting the Mahabharat through his special powers of vision was that it's my opinion. That's the best I could have done. Right. So that's exactly what you're also saying. Right. So I think
Oh,
thank you so much
isn't
for
that
ending on that.
that's beautiful? Thank you. I did not know that, Vishal. I should. I did not know that, and that's a wonderful way to bring us full circle.
That's right. I think so. When we're reading the Gita, Bhagavad Gita, right, we all think about Krishna and Arjun, the discourse that happens, the discussion that happens, but we often do not really take into account that it was Sanjay who actually described the entire epic in his own words but just by seeing and hearing what Krishna was telling Arjuna. So it was his own interpretation, and he mentions at the end, as I said, that that's the best I could
Hmm.
do in my own views. So
Wow.
you've done that over the years, Jason. Thank you so much, and
Wow.
I want to express my deepest gratitude for your time and openness today. And your presence on this podcast has been nothing short of inspiring. And it's been an
Huh.
absolute honor and privilege to have you on the show, Jason. Your words today will, I think, undoubtedly inspire the audience who's going to consume that. And I envy them because they're going to listen to you for the first time. Thank you so much for
Wow.
being so generous with your time and for leaving us with so many insights. And I wish you the best in everything you do, and especially the upcoming publication of the revised edition of this wonderful book called The Intelligent Investor. So thank you for this
Yes.
gift. Thank you for your special inscription on that. And I wish you the best, Jason.
Well, thank you, Vishal. My pleasure. I really enjoyed it.
Thanks, Jason. Take care and have a nice
Okay.
day, Jason.
Thank you.
Thank
All
you.
the best.
Thank you, Jason.